In today's video, I want to go over my guess as to what is going to play out in the currencies and the gold market in July. So we've got a period between now and the 31st. um, the FOMC meeting is on the 31st. How the markets trade into that FOMC meeting, I think, is going to be important. As of um, Wednesday's close, the odds were at 70, I think it's 72% that the Fed was going to cut a quarter point, and actually 28% that they might cut um, 50 basis points. So I've noted this before. The Fed doesn't actually set interest rates. They follow what the market tells them to do. If the odds are over 70% of a cut, then the Fed is not going to shock the market and go against what the market wants. So if the market wants a rate cut, then the Fed's going to give it to them. And right now, um, the market is demanding at least a quarter point rate cut. And as we move into closer to the meeting, we may see that increase more towards the 50%. But right now, the market's pricing in at least a quarter point. So I noted this, I think it was last week. I knew the ECB was going to come in and try and use the 200-week moving average as help to prop up the dollar and try and turn the euro back down. Obviously, the ECB wants a weaker euro, and even this week, even President Trump has noted that the ECB is manipulating their currency. So, we knew this was going to happen. We knew we were going to get a major currency intervention right here at the 200 week moving average, and we did. And I think there might be strong possibility that they've created an intermediate cycle low. Now, with a rate cut being priced in, there's clearly there's no way the dollar's going to rally naturally into a rate cut. It would naturally it would fall into the rate cut, and then you'd get a buy the news type of event. But I've said this many times before. The currencies are the most heavily manipulated markets on the planet, and they just dance to the beat of central bank um, interventions. That's mostly what moves these markets. So the dollar is actually doing the opposite of what it would naturally do. It should fall into that rate cut and then rally as the market anticipates. And the market, I guess what you would say, the market would be selling the rumor and then they would buy the news, but it's doing the exact opposite of what it should do. And we know why. The ECB is trying to keep the euro suppressed against the dollar. So anyway, we've got a weekly swing. I think there's a good chance that this could be an intermediate cycle low. And so instead of falling into the rate cut, I suspect it's going to the ECB is going to try and keep pressure on this and uh, and force it to rally into the rate cut. And then when the Fed cuts interest rates, I think at that point it's going to be next to impossible for the ECB to keep the dollar propped up. And so I'm expecting a right trans or I'm sorry, a left translated intermediate cycle. So you can see these three intermediate cycles were all right translated. Here's the top came very deep into this intermediate cycle. The move down into the ICL uh, clearly did not drop below this um, previous um, pivot. Same thing here. The rally was right translated. Um, the move into the ICL held above this one. Again, another right translated cycle, but notice the change here, actually even here as well. The dollar's just not being able to make much headway. Even though the cycle is right translated, there's just not a lot of headway being made um, into this top. And then we've got another bottom here holds above this pivot, but not by much. Just like I said, the ECB used the 200-week moving averages as help to stop the ICL and the dollar. And I think we're probably going to left translate this next cycle. So I would guess on the 31st, when the Fed cuts either a quarter or a half point, that's the point at which the ECB is not going to be able to keep the dollar propped up anymore. And then I think we roll over into a left translated cycle that um, probably left translates this entire 3-year cycle. So now let me move over to gold and show you what I think is probably getting ready to play out. All right, so in theory, it was definitely time for gold to move down into a daily cycle low. Um, and I guess you could kind of call this one. The problem uh, that I have at this point is that it didn't drop below the 10-day moving average long enough or deep enough to turn the 10-day moving average back down. And that's usually a pretty dependable confirmation that you'll see it at a daily cycle low. So um, this really didn't last long enough or wasn't deep enough to qualify as I'll just say a quote unquote normal daily cycle low. And what I think may be happening, also, the baby bull high was at 1377, I think. Let me stretch this chart out a little bit. All right, so you can see here's the baby bull high at about 1377. The dip didn't quite get all the way to 1377. I would expect some kind of a retest of this. And, we more or less did, but, we came up a few points short of a full test of the baby bull high. And I think part of that is just speaks to the power and the momentum behind this breakout from this handle. But let me shrink this chart back down just a bit. Let me put the 50 and 100 or 50 and 200 day moving average back in here. All right, so obviously here's the 50-day moving average, here's the 200. You can see that price, the force of this move has driven price a long way above both of these moving averages. And, gold is either going to have to just kind of go parabolic at this point, or it's going to need to chew up some time and allow these moving averages to catch up a little bit. I suspect the fact that this surge Wednesday did not go above this peak here on June 25th. This smells like we might be setting up for a triangle. So you can see what that does when this rally comes up a little bit short. It starts to set up the upper trend line of a triangle. And so what I suspect is going to happen is we're probably going to kind of come down and maybe come down and tag this lower trend line. There's just too much momentum behind this move. I don't think there's much chance of this thing just collapsing. But if the dollar does rally into the FOMC meeting, then I think there's a very good possibility that this is what's going to play out in gold. It's going to go sideways, form a triangle continuation pattern, give the 50 and the 200-day moving average a little time to catch up to price, and then these triangles are continuation patterns. They tend to occur about halfway through a move, and then the breakout tends to produce a similar move of a similar magnitude. This was about 170 points. So I think when the Fed cuts rates on July 31st, I think it probably triggers another 150 to 170 point rally, which puts us right up into that resistance zone around 1550 to 1600. So I think this is what's getting ready to play out. I think the dollar's going to rally. maybe a rather weak rally, um, because I think it's basically going to be almost completely driven by the ECB trying to manipulate the currencies. I don't think there's going to be any real natural buying pressure in the dollar ahead of a rate cut, but I do think the ECB is going to try and suppress the euro, and that's going to at least keep the dollar propped up into that rate cut. But then at the when the Fed cuts rates at the end of the month, then I think gold will probably break out of this triangle and head towards that 1550 to $1,600 level. So this is my best guess. I don't think a rally with this kind of force and momentum is just going to top here as a double top and fall down. I don't know that I've ever seen um, a rally only last um, one daily cycle, a right translated um, intermediate cycle, which this almost certainly should be. And I think this is the reason why the daily cycle low just didn't produce the confirmations. Triangles just kind of mess up cycles. They just really don't work in a triangle pattern. So we'll keep an eye on this over the course of July, but I suspect this is what's going to happen. We're just going to get into a back and forth pattern here that's it's going to frustrate the late buyers that came in, finally decided to buy up here, missed this entire rally, and then they're going to get frustrated as gold bounces back and forth in this flag. They'll give up, probably right before the rate cut, and then I think gold will break out and give us that next leg higher.